What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. If you're joining us here on YouTube for the live stream, please click the like button and never miss a live stream by clicking the subscribe button right here on YouTube. What's next for crude oil, stock market, currency markets? How do you handle trading this market and this kind of volatility? Well, today I have two of my favorites to talk about that. Tracy Shuchart, also known as Shy Girl, and Blake Morrow, otherwise known as the Pip Czar. We'll be getting right into it today, talking about what we're seeing and how we're positioned in these markets. And we want to hear from you throughout the discussion. So be sure to drop your questions or comments in the YouTube chat. This podcast is sponsored by TradeStation and FTSE Russell. The Russell 2000 is a key benchmark for small cap US stocks. To learn more about the FTSE Russell and the FTSE Micro Russell 2000 future symbol RTY and Micro E-Mini Russell 2000 future symbol M2K, go to FTSERussell.com. Also, I want to let you guys all know TradeStation is running a promo just for our audience. New users get half off brokerage fees for the lifetime of their account using the promo code FUTRAFZT, as long as they open an account by April 30th. To learn more, go to tradestation.com/Anthony. We got Pipstar and Shy Girl in the house. What's up, guys?
Hey, Anthony, how's it going?
I'm doing great. How are you guys?
All right.
It's good. It's good to see you. The markets are crazy.
Yeah, I mean, we're going to get right into it today. I think the first thing I want to talk about is really handling this volatility because, you know, Blake, you and I were talking a little bit before we went on today, before even Shy came in. And I tell you, this year for me has been really a roller coaster. And I try to keep it away from being a roller coaster, but I had a really good start to the year, gave a bunch back, had a really good start to March. Then everything I touched at the end of March was just like, you know, a straight loser. Just feel like I'm just getting, you know, clipped everywhere I turn. It's amazing how hot you can go to how cold you can get. So I've just been kind of, lately just, trying to just get myself back, calm things down, trade a little bit smaller. But how do you think that traders should approach trading this type of volatility?
Well, that's, first of all, it's a great question. And as a currency trader, predominantly, I don't want to say I don't fish around in other products, because I do in other markets, but really focused on currencies the last 5 years it's been brutal. Euro volatility has been, around 5, hovering around 5. Nothing's been moving. And then all of a sudden, we have an explosion of volatility over the last few months. And really it's interest rate expectations have been moving globally with central banks. And that's created that volatility that as currency traders, we've just been thriving for. So now that we've realized that we're in this, high volatility environment, the key for me has been being able just to stay in a trend, is just reducing position sizes dramatically and then widening stops a lot. So this way I'm not worried about severe swings in the market. And we've seen so much of that this year that it's great. But the macro backdrop continues to shift. And obviously what's happening with Ukraine and the invasion of Ukraine by Russia has thrown a monkey wrench in a lot of different things, whether you're talking about commodities or currencies and interest rate expectations and what the ECB is going to do versus the Fed, the divergences between central banks. I'm just naming those two. And then this huge rally in the commodity space, which I'm sure Tracy's has been thriving on and also is going to talk about. But this is all just really created a massive amounts of volatility. And I'll echo what you're saying as far as streaking, if you will. And it's not the Will Smith. I was trying to think streaking of old school. What's his name?
Will Ferrell. But you got Will Smith on the
I'm not talking about that streaking. I'm talking about streaking as far as trading goes. I realize when I'm hot, which, I have those periods of, feeling on top of the world and the market can't beat me. That's the exact precise time that I've cued in to myself, doing this for so long. And you guys have probably done this as well, that I actually started to pare back my position sizes even smaller, because I know I'm about ready to get smoked, because the market knows exactly when it needs to teach me a lesson. So
well, that's pretty much what happened to me. I got aggressive in crude oil. I was long crude oil, had a great runner on, and I pressed it, Yeah, and it was funny. I had an area at like 116. I mean, it's still, I think about it, I'm like, why did you not take any off there? It broke a little bit. I added. Next thing you know, I'm getting stopped out across everything in a bigger position, and got a little greedy there for a little bit, but it happens. I mean, Shai, what about you? How do you handle trading this type of volatility?
Well, I mean, I definitely smaller position size, right? And if I'm looking at something like the futures markets, make use of like the micro contracts, if any, because you can put a bunch on, you can scale in and out really easily, and you can kind of widen your stops out a little bit. So I think that's a good way. Otherwise, if you were, you could also, go, with options, obviously, just do, like a call spread or a put spread. So at least you have your risk defined, right? So, if you're going to lose, you're going to lose X amount of dollars. So that's another way to approach it. Or if you, are looking at a long-term trend, right? But the market's really volatile now, then you can look at, like way out, um, uh, options, right? So, I have like some 2023 crude options on right now.
Yeah. Yeah, I mean, I think that the one thing I look at on the future side is two things you touched on: options and micros. And the other thing I would add is just rotating in and out of positions. I mean, I think, Blake, you touched on it as well. It's like, when things are going really good, and my mindset is always to press. I'm just a presser, and things, if I'm making money, I just get really aggressive. That's just how I've made money, and then it could really backfire on you quickly if you're not quick to pull the plug. And it's like, and I talked about this a little bit on Twitter. It's just about being in a rhythm. When I was in a rhythm, getting in small, rotating in and out of positions, continuing just to take profits in areas that I like, really just being conscious of it. The one time I actually said this thing is going to keep running and I pressed was the one time I had the biggest loser of the year. And it's just incredible how that works, right? But, it's about constantly reminding yourself to just, I think, just stay in that rhythm of being small and taking on the positions that you can control, and not being scared to take profits. Like you said, Blake, kind of when things are going really well, it may not be the only reason, but when you look around and say, look at this thing came back so fast, maybe I want to trim something here.
This week is a pretty good example of things turning on me as a whole. So as currency traders, I tend to trade a lot of currency crosses. So I might buy a little, let's say, euro against the sterling, and then I might say, well, the euro against the Aussie looks pretty good, and my risk reward here in the euro Kiwi is pretty good. That was an example of like 3 trades that I was long earlier this week, and the euro Aussie broke after, following the RBA. I thought the RBA was going to be hawkish. It was going to be more of a hawkish meeting, and it happened that way. Unfortunately, what it did is it really turned one of those pairs lower. The problem is when you press, like for you might press hard on one position. I press in multiple positions, maybe across the board. You could call it diversification, but the fact of the matter is it's all euro related. So if one euro pair starts to break, it might take the other pairs with me. And I had to basically just, take my losses across the board in those pairs, knowing that one of them broke, and knowing that the correlations might take hold, which they did. And, and sometimes you just gotta be able to, swallow it and take your medicine. And I've become better at that. It's funny, after trading 20 some odd years, going on 25 years now, you're always learning as a trader. You're always polishing your skills. And usually when you forget, things, maybe lessons you've learned in the past, the market's pretty quick to re-educate you in those instances. Wouldn't you guys agree?
Oh,
Yes.
God. I mean,
Yeah.
I said the other day I had to take a few days off just because I was just like, I was looking at it, just like, what are you doing? I mean,
That's the best thing to do, though, is to walk away when everything just gets like, it's just one after the other. It's good to just like step away for a few days and like clear your head.
Yeah. I mean, I went and gambled and played golf, lost on both of those too. So I kind of have a losing streak going on right now. So it's not been the most fun for me, but I want to go with you, Shai, and we're going to start to get a little bit more technical here and just talk about some of these markets. And Blake said it. He's like, the macro shifts are unbelievable. I mean, this is why I follow people like you. First off, congratulations on the new gig.
Thank you.
We'll let you talk about that for sure. But what are the things that we should be really focusing on right now, Shai? Because I think, for someone like me I'm not a macro trader, but I follow people like you to understand the macro environment. But it can get overwhelming. I get totally, just thrown off because I'm like, is it Ukraine? Is it this? Is it that? Next thing you know, I'm like, I don't even care what's happening. I'm just following the markets. But I do want to know what I think is the main macro theme, because I think it does help us even as technical traders.
Yeah, I mean, well, first of all, right now everybody's looking at the Fed, right? That's first and foremost, because they keep, every analyst at every bank is trying to outdo each other on how many rate hikes they think that the Fed is going to do right now. But they pretty much promised 50 basis points. I mean, if they don't do 50 basis points this next meeting, I think they'll lose any shred of credibility that they have left. But so right now, obviously, that's going to weigh on, particularly say like tech stocks. So that's definitely something to look at. If you're looking at the commodity space, obviously you're looking at Ukraine, Russia, because they're so heavily in metals, grains, and obviously oil and gas. And so that's going to affect the commodity markets. And it's very hard right now because the market's moving on every headline, like just getting jacked back and forth, right? So, what I tend to do is, I have my long-term themes, which you already know are energy, agriculture, and metals, and have been for the last a couple of years. So, really what, as far as Ukraine and everything is concerned, I figured that a lot of that jerkiness will start to subside eventually, right? I know when the market kicks up really quickly on initial headlines, I always usually figure the market's going to pull back some to reasonable. Um, so really those are the two main things you need to be looking at right now, really, as far as macro is concerned. And also, focus on, well, for me, in the energy markets, focus, on Asia right now in particular.
Blake, what do you think about the macro shifts right now? What are the main things that you're focusing on?
Well, Tracy actually hit on them, because the commodity currencies in the FX market are just absolutely, they've gone crazy, and they've really, one of the big things that I focus on, obviously, as a predominant currency trader is looking at the dollar index as a whole, but it's made up of a lot of little bits and pieces and a lot of different currencies. And the outperformance of the commodity currencies in this environment, even when there's a little bit of risk aversion, maybe some profit taking in some of the bigger indices, has been something that I, as a currency trader for the last, since I made the shift from trading equities to currencies in 2001. So really over the last 20 years, you really haven't seen these commodity currencies act the way that they're acting right now, and they are really bucking the trend. So it's like equity markets go down, usually those get hit, but because there's such a demand for these commodities in general, the commodity currencies are really resilient as well. So I have to say that the big macro theme in the currency market is there's a couple of things, actually. It's one of them is the Fed, and how people are, analysts have such high expectations, but the dollar really hasn't been as responsive as you would have thought. So therefore, I think that there's room for other central banks, whether you're talking about the ECB, the RBA, maybe even the Bank of England. Expectations are going to play catch up a little bit, which is going to weaken the dollar over time and probably throughout the second half of 2022. And also, you're going to continue to see outperformance of currencies like the Aussie dollar, the Kiwi dollar, the Canadian dollar, maybe even to a certain extent. And some emerging market currencies which have acted pretty well, like the Mexican peso or the South African rand would be another good example. But the thing is, I try to tell this story because I think it's important, because when you talk about technicals and macro and how important macro is, to have it as a backdrop behind what you're doing technically to find those entries. I got asked at the end of last year what my favorite trade of 2022 was going to be. I got asked by one of our broker partners that wanted a quick video to promote, and I said, it was the Aussie dollar. I'd like to buy the Aussie at 70 cents, and in my mind I was thinking, well, I think the Aussie is actually going to go from 70 cents to parity at some point over the next few years. I didn't quite know how that would happen. I just think technically it looks like the setup. Now dealing with the narrative has shifted from, because of what's happening in Russia and this commodity desire from the markets. I can actually see that happening now from a macro standpoint over the next couple of years too. So it's interesting how you talk about, why the macro, or you made a point to say why the macro backdrop is so important to what we do as traders, because it is.
Yeah, because for me, I'm definitely more technical based, but over the years, I've become more and more. I mean, over many years now, it's funny. I would say 10 years, I've had to start keeping my eye on it, my ear open to it, because these moves. I know a lot of people will say just watch the price action; it'll tell you everything you need to know. But if there's something behind the price action that's driving it that could make that move bigger, coinciding with your technicals, you have to know this. And I find, in this environment, when it changes so much, that it really could be, it's very difficult. I mean, look at the rally. You talked about, Shai, we'll go back to you, how you think with rates going up, it could hurt, tech stocks. And you look at how what the move has happened recently, and NASDAQ had a huge rally off the low, right? And then, we've had a decent break, and you could talk some technicals, how we failed at the 200-day moving average and such. But it's like, this Fed meeting now is going to be so important as to what the NASDAQ does. If you don't watch what the Fed is doing or keep up with this stuff, I mean, the NASDAQ, the price action is really almost telling it two stories: a rally off the low, a fail of the 200-day moving average. Okay, on a bigger picture basis, what's next? And so that's what's going to go to you, Shai, and say, how are you positioned? I mean, if the Fed is the main focus right now, where do you see the best way to position?
I'm hiding out in energy equities right now.
So energy equities, and that's been a while for you.
I'm in energy equities and some miners right now. That's kind of where I'm basically hiding out.
Gold miners, right?
I do have a couple of gold miners. I have uranium, believe it or not.
How are you trading? Real quick, I want to stay on uranium before you get the other ones. How are you trading that?
I'm in UROY, UROY. Right now, I've been in it for a couple months. It hasn't really done much, to be honest with you, but to me, it was really good risk reward. It's like trading at 395 right now. I mean, I didn't want to put a huge position on. I didn't want to put a lot of risk into it, just because uranium has been really difficult to trade over, forever. So, I figured with this Russia thing, it was kind of nice risk reward for me, right? To start in a kind of like a cheaper stock and with not a huge position on.
So I want to stick with why you think uranium is a play with what's going on in Russia, because I read about this too. I actually was searching for ways to trade uranium, and I really couldn't find a way to do it. I ended up going online and finding SRUF, SRUUF. I'll pull up that chart in a second here, but it's like I was struggling to find ways to even participate in it, because it says that that there's like a futures market on it. I even looked at it on CME, but there's not really, it's not something that I've seen traded, just like the actual market. So I had to go to the ETFs. For me, I felt was the only way. But explain to everybody why that's a play.
Well, first of all, Russia provides a lot of enriched uranium to the world, right? In fact, the U.S. buys a lot. So if it comes to the point that the world goes ahead and sanctions that would be very positive for uranium outside of Russia, obviously.
Yeah, I mean, I pulled up a chart of this, and I don't know, are you familiar with this ETF, Shai?
A lot of people are in that one, yeah.
Yeah. And so basically, I heard the same thing you did. I looked at it and said, this is an actual supply and demand thing, which we've talked about a lot lately with oil. It actually is one. And so this is just something that I've been looking at. If you guys are interested in what that is, and the one that you were in, actually, I'll type that in right now. Is what is the symbol?
UROY.
UROY. What did you thought about this uranium stuff, Blake? I know that you focus a lot on the currency stuff, but have you even looked at it at all?
I haven't. It's not something that it's even in my wheelhouse, and I don't pretend to like try to, if I don't understand the move completely in my own head anyway, what I think is perceived as understanding, I tend to shy away from it. So.
Yeah. The only reason I even did this play is because, once again, it doesn't move a ton. And I looked at it and I said to myself, you know what? I like the chart pattern. It kind of goes back to where I said, even though I'm more of a technical trader, when I have, anytime I see a macro theme that is playing out with technical supporting it, I look at it. I mean, it's not for like you said, I try not to get away from what I do too much either, but this was something that I've taken a look at. And Shai, one other thing I want to talk about before we get back to Blake and see what he's trading is talk to us just about oil, because look at, I've been bullish this as much as anybody. I have been trading this a lot. And like I said, I talked about even how I got clipped this year. This pattern for me now is just so difficult. I feel like as bullish as I am trading the price action in it is just so difficult.
It's very difficult right now. It's very volatile right now, right? Because you have a million headlines going on, right? We just dropped today because the IEA announced that between the other IEA countries, they're going to release another 80 million barrels in SPR, and we dropped immediately. So right now it's subject to literally any headline is going to make this move, right? But what makes me still bullish about it is it gets under $100 and it gets bought right back up.
Yeah,
and
we're
it's
below
been
it right
that way,
now.
right?
Yeah. So is that kind of the mark that I was going to ask you? What are you looking at as an area, as a key area?
So obviously the 200 day, but we do have down at, hold on, give me one
So
second.
let's see the 200
So
day. I'm
we
going to
have
pull
a
it up.
gap that still needs to be filled that I always at least keep in mind, right? And I pulled up the wrong chart.
Yeah, I have the continuation chart up here on TradingView.
All right, so there's a gap at like 93.15 on the front month. So it is, it's very possible that we could do that. And so, I mean, possible we could, dip into that 200 day, right? Get that 93 and then bounce back up. But right now, overall, is what I'm watching right now is, China has 151 million people on lockdown right now, right? As soon as they start opening up again, then all of that demand comes rushing back. So that's also weighing on oil as well. I mean, China's a huge consumer, right? So, I figure they'll start opening up again in the spring, just in time for high demand season and in the West, right? Summer season. In addition, we're still in a structural deficit, regardless of even if Russia was still producing as much as they were in January.
Do you mind if I ask a question here?
Oh, go ahead, man.
Go ahead.
Well, one of the things just talking to a lot of different traders and a lot of different, analysts, and you realize, or at least I realize, excuse me, that the market is very, very position long crude. Now, I don't disagree with the thesis of being long. I actually don't at all. I'd love to be long crude, and I actually would be a buyer of crude. I'm actually looking for a little bit deeper of a correction into the 80s. And it won't be long lasting. And matter of fact, if we reach a place like the mid 80s, maybe even the lower 80s, I think if you blink, you might miss it. It would be a day trip, maybe down into that area. But I actually think that the market is really positioned poorly at this point. Everybody's bullish. There's all the reasons in the world to be bullish. And I'm not saying that I would be short either. What I'm looking to do personally is I've got a bunch of technical alarms set up that if we dip below 90, I am going to start looking to be long crude, and it's purely on a let some of the weak hands get shaken out, to get on the long side. And I'm actually looking at 86 bucks on the continuous. So that's something that I don't know if we're going to see it, but a lot of times for me, I like to plan my trade and work my plan, because I feel a little like at this stage in the game, I'm a little late to the ball game, just trying to get long crude at these levels, I feel. But it doesn't mean that I want to be short either, because a lot of people automatically think, oh, well, if you're not bullish, you're bearish. No, but that's not true.
Right.
I'm bullish. I just don't want to be long at these levels, right?
Well,
so anyway, that's just my thoughts.
Yeah, what happened is though they raised margins so much that threw a lot of the specs out of this market right now.
Yeah, that's true.
That when that headline came out, I was actually long at that moment. And I remember watching that close, and it had like a little break, and then it rallied back. I'm like, well, maybe that was it. It wasn't, but but you're right. That is definitely a factor in this. And Blake, I've been kind of thinking that same way too with crude oil, because, like I said, I did really well in it. I caught a huge part of it, and then I just gave back like a huge part of what I had made, because I talked about that. But now I'm looking at it when I reassess and I look at this market. I agree exactly what you said. I think it's just positioned so wrongly that I'm almost looking at this like the way I look at like trading Bitcoin, because I look at it as it's so volatile, like a crypto, to where I want to buy the crashes now, because this is something to where, and the crashes may not be big. It may not be a crash, but I look for the days where it's down, a good percentage. And you look at it and you say, does it make sense? Can I manage risk here? Because trying to buy this on an up day is so tough, and I've just gotten chopped up so many times where I'm like, you cannot buy, at least for me, strength, even though this is one of those markets where I really want to be long it. I find that you really have to be disciplined enough to say, if I miss it, that's okay. I cannot buy into this just because I know the overall theme is bullish.
Well, aren't we just like, we're literally one headline from a 5% rally and a 5% decline.
Absolutely.
So, yeah, that's the risk. But you make a great point, because this is something that I will, when we look at some currencies, whenever we decide to do that, I know as a trader, I can't control, especially in this crazy environment we're in. You can't control the headlines that come out. You can't control what Putin's thinking. All we can do is assess risk. And now more than ever, and I've talked to a lot of traders about this, because I've watched traders get demolished, get rolled over, because they sit in positions for a long period of time. They don't realize that, well, the market's turned on them, but they think, well, it's going to bounce back because it's overbought or oversold. But we can be more overbought and more oversold, and then some, multiple times over in this environment, because of the headline risk. So when you're, as a trader, all we get to do is really define the risk, put in our stops, position correctly, and if we get caught on the wrong side, take your medicine and move along. And I think a lot of traders really struggle with the idea of like, I'm right, market's wrong, it'll bounce back, and we all know what the outcome is after that, right?
Yeah.
Oh, I mean, for sure. I guess I'll ask the two of you guys. I mean, we'll talk a little bit about equities, and then we'll get to you in a moment here and talk about some charts in there. But on the equity side of the markets, I've also was looking at crude oil to see how much of an impact that's going to have, on equities, right? And I don't know how much that story is even playing out. I mean, what do you think about that, Shai?
It's lost its correlation a while ago, right? It used to be very, very correlated, particularly a couple of years ago. But really, I mean, that correlation is out of the market, at least right now.
It's just because of the Fed, right? I mean, the market gets fixated on one thing, and that's where it goes.
Exactly. And because because commodities are so bullish right now, because there's actual supply demand problem, whereas looking at the equity markets, they're more worried about the Fed right now, and so the correlations just aren't there. And the Fed can raise rates all at once. It cannot fix actual supply demand problems, right? And so that they're going to have a very difficult time still trying to bring down inflation in, say, energy and food.
Blake, do you trade equities at all? I mean,
I do. Well, I usually trade indexes. So I'll I was just short the S&P earlier this week, and this is a funny conversation that you the two of you could totally identify with. And I was telling, some of the traders that I trade with, it's like I book profits just to make myself feel better after taking some losses.
No, it's the
Oh
way.
yeah.
Yeah.
So in some currency trades, I booked a short, and then obviously today I'm like, well, I wish I was still short, but at that moment it was the right trade for my psyche, right?
Yep.
And sometimes you gotta fix, because you can't trade when your psyche's screwed up. You become blinded, right? So. Yeah. So to answer your question is, do I trade individual equities? If there's a great idea and I've done some research, but I tend to just trade the indexes when opportunities arise, like being short the S&P near the 4,600 level this week. So.
Yeah, I mean, for me, mostly that's what I trade as well. I actually think we'll probably talk a little bit about Twitter here in just a second, but I just want to get both your take overall in equities right now. I mean, you've already said, Trace, that you think that tech is going to struggle because of the Fed. Is that your stance, that you think that for now, right now, the bears have the hand again?
I mean, just as a whole, I mean, not obviously there'll be some individual stocks that will perform well, but I think as a whole, that's really going to weigh on that sector.
And the question I have for you is that because it's already one of those things that's already known, where like we already know that that's coming, right? And we have earnings coming up, and I'm be curious to see how they are. Is that something the market, like what would make the market start to look past rates? Do you think earnings are going to have any impact?
I think it will depend on how much they actually raise rates. And then I also want to see, are we going to, we are actually starting to see growth slowing, right, in the United States. So I want to see how much that's impacted as we move beyond Q1.
Yeah. Blake, what are your thoughts just on, I know we're going to talk about the major indices. I think that's just for me what I think most of us are focused on anyway.
How long have we been partying since it's 1999? Like literally 12 or 13 years now, right? I mean,
Totally.
we've been in a massive liquidity driven market for 12, 13 years. And so many market participants haven't seen anything but that. And so I think as the Fed pulls away the punch bowl, and every other central bank as well, and they reduce liquidity globally, it's going to weigh on the markets. It's going to be a total headwind moving forward. I think you look for opportunities to sell rallies, and you have good news. Let's hope. Let's hope and pray we get some good news out of Ukraine, and maybe there's a ceasefire, de-escalation. I'm going to be the first person to sell that rally. I mean, the wake of damage that has been left behind with commodity prices and inflation and possibly stagflation that we're dealing with currently, that, even though the data is not out for us to make that determination, we're probably in a stagflationary environment. I mean, you want to sell rallies, at least, I would say in the foreseeable future for the next few months. So I just look at we're carving a longer term top in a range, a range that could be from, let's just say, roughly 3,500 in the S&P, 3,800 to 4,500, 4,600. I think that's going to be like a long-term range we're dealing with for the next 12 months or maybe even longer.
That's the way I feel about the market right now. I feel like range bound for sure. I don't see any one side really having control because of the things that we've all talked about, how the macro shifts are. I mean, just like we said, crude oil is a 5% move or headline could move at 5% in any direction. I think it's the same thing for equities. I really do. I feel like it's that fragile. I feel like there's so many weak hands out there. The way I see that this market trades, like you look at today where they're just burying it. I mean, I feel like it could easily be up 300 in the NASDAQ tomorrow for any sort of, headline. And you look at it and say, what's really changed? Not much.
Well, a lot of liquidity is out of the markets in the indices, right? I mean, the volume is kind of
Explain why you think that is.
low.
Anemic.
What? I mean, all you have to do is, yeah, exactly. You just have to look at the volume. I mean, it's just there's, people aren't trading.
But why do you think that is? Is it just because people are just getting whipsawed?
I think that the market's too volatile, and I think they've raised margins on everything. And I think that I'm sure a lot of people in some of these moves have gotten wiped.
Can I and I want to say, as far as volumes being down, I mean, we're seeing it's massive rotation, right? And one of the things that's actually supported North American equities, I believe, over the last couple of months, and you can see why the volumes have pared back, especially on this rally that we saw over the last month and a half or 2 months. You had a dramatic shift from European equities into North American equities because asset managers need to put their money somewhere. It's not like we're seeing money flee the markets and seeing a massive rally in the dollar. And if the dollar index was trading at like 110 right now, I might have a different tune. Or if gold was ripping to new 52-week or new all-time highs and more, or and maybe even you see a flight to safety in like Bitcoin. If we saw things like that, I would be like, okay, volume's going to pick up to the downside. We're going to see a sell off in equities across the board. But really, it's been more of a rotation, right? I'm selling the DAX to buy S&P. I'm selling NASDAQ, and I'm going to buy some of the bigger name stocks that have actual revenues, and they're not growth stocks, but they have they have earnings and pay dividends or whatever. So I think we're still in a rotation market, and that's why volumes aren't huge, because there's not a lot of new money coming in. It's just money going from one hand to another or one market to another. I don't know if that made sense to you guys.
No, absolutely.
No, yeah. I mean, you look at it like this. I mean, even for me as a shorter term little guy out there in a big sea of traders, it's like every time I get a big position on, whether the NASDAQ or crude or really anything, it's like, man, I am so quick to get out when it starts running against me, because it's just running. I mean, like I have to really spread my orders out now, because when I'm getting in, or if I want to get into a bigger position, it's not like, anything I click in to a full position right away, most of the time they're shaking me out. I have to really break that position down and be so patient and really grow into a bigger position. Otherwise, the volatility just gets me out. I have a weak hand. Even if it's within my risk, it's moving so much, I'm always trimming, because I'm like, it's too much to deal with. And so if I'm doing that as a little guy, you think about these much bigger, obviously monster people out there trading these markets, and they're thinking the same way, man. You have to be a scaler here. You can't be in a hurry. And if you do get in a hurry at any of these edges, they make you pay quick.
It's true.
We're going to go to the charts here in just a second. We're going to take a 15-second break. And when we come back, Blake is going to go to the charts and show us what he's trading. Back in 15. As I mentioned in the beginning, everybody, this podcast is sponsored by TradeStation, and TradeStation is running a promo just for our audience. You can see a link that I put into the comments section. It is pinned at the top. And new users will get 50% off brokerage fees for the lifetime of their account using the promo code FUTRAFZT, as long as they open an account by April 30th. Go to tradestation.com/Anthony to learn more. Like I said, it'll be in the description page. If you're listening to this on audio, you can go there and find it as well. And, one thing before we get to the charts here, I want to tell everybody that's listening to this, I'm actually going to put something in chat as well right now, is you have myself, Tracy, Blake, Danielle DiMartino Booth, Jim Rickards, Peter Schiff, Mark Minervini, and many others at this Trader Summit coming up on April 8th to the 10th. It is free. Spacing is limited. It's coming up. I'm looking forward to this. Blake is there from beginning to end. Shai and I will both be speaking. I put the link in there. You could see that in the drop down in the comments section. And I want to thank Blake and his team and for putting this together. I think it's one of the best, if not the best, a summit out there when it comes to traders. So I highly recommend everybody goes and signs up and see all of us there. Blake, just real quick before we go to the charts, just give everybody that quick overview of what it is.
Well, the Trader Summit, I love these type of events because you actually get somebody for 45 minutes, and you get to really not get sound bits from them. You get to actually get their entire thought process. And talking to people in every facet of the market. If you're a crypto person, there's, Mark Yusko, who's a partner with Pompliano, who, manages crypto funds, to asset managers, to portfolio managers, to if you trade equities or currencies or commodities. You got Tracy, you got, and some of the biggest, Fed people names out there, whether it's Daniel DiMartino Booth or, people that really watch the Fed, or gold traders like Peter Schiff. You got so many people, and you got 45 minutes at a time, and it's great. They take Q&A, and I think it's a very special event. We try to do it once a year and bring out some of the best speakers and people like yourself that really talk to the traders out there, the people that are like, Anthony. I mean, you talk to those of us that are actually in the thick of it every single day, and that's what traders want to hear, and they want to get people's opinions regarding that. So it's going to be a great event. It's this weekend. Make sure you do register. Though we've had people not be able to get in the live event because of seating. So seating is limited, and if you for some reason can't be there, just register, because you'll also get the recording afterwards of each of these speaking engagements. So it's going to be great.
I can't wait for it. Real quick, Trace, what are you going to be talking about at the Trader Summit?
So obviously the commodities markets, right? Big surprise there. So energy and materials are basically what I'll be covering.
Got it. Okay, Blake, we've got the charts up here. We've talked a lot about crude oil and equities. Now let's get into some of the things that you're trading. What are we looking at?
All right, I'm actually showing you guys about a 20-year chart of the euro, and you can see that bottom trend line, that red trend line across the bottom. That actually takes us to where we're currently at. If you have the October of 2000, some lows that were tested back in 2016, 2020, post COVID, and then just where we're at right now. Basically, the 108 is massive, massive support. Everybody's got their eye on it. And we're heading into ECB meeting next week. Now, I'm glad I get to talk about this today, because when the Trader Summit event this weekend, I'll be doing a lot of the asking the questions versus showing you analysis. So I'm glad I get to do this today. But I'm establishing a long position in the euro. And the reason why is, as I mentioned to you before, as a trader, we can just identify our risk. And when I know there's a big event coming up, like next week with the ECB meeting, and there could be a massive policy shift by the ECB, I want to try to prepare myself for that event and try to get myself in a profitable position ahead of the event. So once the event happens, if it doesn't work out the way that I thought, well, I've got a manageable risk at that point. But also, if it works out the way that I do think it will, then I'm positioned with a really good price if it should go my direction. So I'm establishing a long position because I think that the ECB is going to be forced to make a really big policy shift regarding what they're going to do with rates. If you've taken a look at German, Spanish, Eurozone CPI in general, it has obviously gone crazy because of what's happening in Ukraine.
Netherlands is double digit.
Yeah, look, all of Europe is going to be suffering, and so the ECB is going to be faced with the same questions that the Fed has been. Do you fight inflation, or do you hamper growth? And I think at this point they have to take care of inflation, at least in the beginning stages. Once you start raising rates, then, and if it starts to crimp growth, then you can slow down policy if you need to. You can pare back. But right now is where I believe they need to act. So we're going to get indications of that, I think, going into next week. So if that's the case, the euro dollar, I have to say the euro has really held up very well despite what's happened in Ukraine. Like this is the invasion right here in February, right? If you would have asked me, and I didn't trade currencies and I wasn't looking, but if you would have asked me before the invasion, said, hey, if Ukraine was going to be invaded by Russia, what do you think is going to happen to the euro? I'd say, well, because of the close proximity to Europe and all the commodities that Ukraine produces for the Eurozone, I think the euro would be trading at parity. Well, that all happened, and we're nowhere near. As a matter of fact, we're holding up very well, despite interest rate expectations of the Fed being way higher than most people believe they'll be able to act on, and with the ECB rate expectations being basically non-existent. So a policy shift like that could really put the euro a lot higher than where we're currently at. And I think that before the ECB meeting, you might see some position squaring in the euro, maybe back up towards 110. We might be trading back up towards, maybe around mid-range of this this channel that you can see here. I think we're going to be about mid-range. And if there is a positive shift in the euro, then the euro, or hawkish shift is what I should have said. We could be trading at 112, maybe even 113 going into the next couple of weeks. Now, let's say I'm wrong, and let's say the ECB is dovish, and we walk away from after next week, and we decide, man, there's no way the ECB is going to act, and maybe they won't even act going into 2024 because growth is so weak, or whatever our argument is. Then the euro is going to break down from here and probably trade through 108 and maybe even head down towards parity in the coming months ahead. Now, I'm not opposed to being short the euro, and I don't like to cut and reverse, but in this case, because I know that we're at such a huge inflection point on a weekly basis, that I know if we get below 108 and we get a weekly close below there, we probably will be talking about 105, maybe parity in the months ahead in the euro dollar. And so therefore, I know that if I get caught wrong-sided following the ECB next week, I have the opportunity to actually be on the short side of the euro and look for a much bigger, broader move lower in the weeks ahead. So that's long story short, Anthony. That's how I'm positioning myself ahead of the ECB meeting next week, and I'm getting along. And I know I can add. We talk about like the the infamous pressing the trade. I know we can add, and I know I can add to this trade. But once we get above 112, if I've got a position here at 110, we get to 112 and we really start rallying, then I can actually add to my position, have a cost average around 111, and then ride it out, back to the 200-day moving average back towards 115. That's my plan. That's my trade. I'm sticking with it, and I'm going to trade it. So now you guys know what I'm doing.
So something I want to comment on that is, and I think this is one of those skills that you develop over the years as a trader that goes beyond the strategy that you mentioned. And I'm wondering if how many people even kind of caught that, is that when you think something should happen based off of a headline, right? Because we've been around, you said, if they would have asked you, you would have thought it would go into parity, but it didn't. A lot of times when I see things happen through a headline or something, and the market doesn't do what I thought it could do, the potential of a macro headline or news or event, and it starts to hold, to me, that is where I have found some of my best trades, going against what that was, because there's a lot. If we thought that, other people thought that, and then you back that up with the technicals like you showed there, I think that's very interesting. I mean, this is the reason why I love Tracy's stuff so much, because when I look at her macro side of things, when I think that something should do something and it can't, to me, that is almost more valuable information, as crazy as it may sound to some people, than something doing what I think it really should have done. It's just my experience. I've seen that. I don't know what you guys think about that.
Tracy, did you want to add there?
So no, I think that was well said.
Well, there's an old saying, and Anthony, you know these sayings, like when the market stops going down on bad news, you got to be a buyer, or and this has been around decades and decades longer than we've been even trading or alive. If a market stops going higher on good news, then you got to be really wary of the downside risk, and that's the case with the euro. Like the euro should have been going down a lot more aggressive, based on the Fed, based on Ukraine, based on the slow growth in the eurozone, based on name 1,000 other reasons why the euro because the euro is a failed project. I don't care, whatever argument whatever argument you want to make. The euro should be
a failed project,
but it's not. But that's the thing, is it's not. So if I was short, and I try to put myself in the shoes of somebody going opposite the direction that I'm trading. If I was short the euro right now, heading into the ECB meeting, I would probably be ready to strap on a set of Depends.
I was going to say, wearing diapers.
You know what I'm saying? So
I don't like to be short anything ahead of Ahead of the Fed. Or
Well, this is
ahead of
so,
any central bank. You never know
hey,
what they're going to say.
you're right. And you don't know when you have a Draghi moment, I'll do whatever it takes to
Right.
save the Eurozone. And then you're just like, holy cow, where did that come from? But yeah, you're right. But so let's talk about that for a second, Tracy. So again, the plan here is if I think the euro, and this is something that this is a tidbit of information I like to pass on to all of my traders that I work with all the time. I always think before a big event, the market goes mid-range. So whether it's a Fed event, whether it's a jobs report, if everybody's focused on jobs, CPI nowadays, the market, at least in currencies, tend to go mid-range. So if I look at this, euro dollar, and I say, well, the range is from 108 to 112, right? And so if I think this is the range, which you can see highlighted in this red channel, and so if I think we're coming back to mid-range ahead of that news, which will be somewhere around here, and that takes us into next week, then I think that we might bounce towards that area. Then I'm going to try to trade into the middle of that range between now and then. And so when the event happens, let's say it's the ECB, if it happens in my favor, then I'm positioned very well for it. And if it goes against me and it stops me out, then and I have a smaller position, then fine, I get, I take a little bit of a loss and, dust myself off. And, in this case, I'd take the other side of the trade. I'd be looking to go short. But those are the kind of things that I try to do in the currency market personally.
Trace, I want to stay with the currencies. Is there anything that you're looking at while we got Blake here with the charts up that maybe on the macro side of things, maybe we'll take a look at and just see what he thinks about it?
What, in currencies? I mean,
Yeah.
I think, well, obviously, NOK is very interesting, obviously, because it's an oil currency. I know that they're going to be selling a NOK throughout April to buy foreign currencies for their sovereign wealth fund. So I know they're going to be doing that. I was watching to see if there was going to be any weakness on that after that announcement, because it was, I don't know, I think it's over 200 million a day, something. So I was looking at weakness, but I watch NOK a lot just because it's an oil currency, and CAD you can too, but CAD has its own problems right now, and it's kind of started to decouple.
Did you guys know this? And I'm gonna ask you this, Tracy. Did you know that the sovereign wealth fund, Norway Sovereign Wealth Fund, owns 1.5% of all stocks globally?
That's insane. I did not know.
Like of every stock globally. That's crazy, right?
Well, it's like over $1 trillion, right?
Yeah, and they own 1% of U.S. equities, all U.S. equities.
That's insane.
So what that tells me is they're very heavily weighted in, obviously, Apple and whatever else U.S. equities. But the fact of the matter is, if the U.S. equity markets gets pulverized, that's why we saw this big spike, post-COVID lockdowns when the equity markets got upended. That's what created the spike higher in the dollar Norway and the NOK is people sold the crown because people were worried about their exposure in U.S. equities. Isn't that wild?
That's crazy.
That is wild. I had never even heard that before.
Yeah, it's wild. It is wild.
We got about 2 more minutes before we go to some Q&A and we kind of close out here for today. Obviously, everybody, if you guys are listening to this in the live stream, put some of your questions there in chat. There's a few in there I'll get to. And once we get off
you can put the ruble up.
Oh,
everybody's talking about it.
Man, it's strengthening still today. I mean, how do you obviously I can't trade it. As a retail trader, I'm not trading as institutionally like I used to. So, they're usually the first ones to pull the plug. They usually let retail traders like me and everybody else kill each other and trading the ruble, but they kind of pulled the plug there. But can you believe the ruble is strengthening the way it is? Now, Tracy, wouldn't that have more to do with what Russia is saying has that you have to pay for.
Yeah, I mean, a lot of that has to do with you have to pay in rubles, obviously, because then what do you have to do? You have to go out and sell your currency to buy rubles, right? Which keeps their currency afloat. And I mean, it's, Putin may be delusional, but one thing he is not is dumb. By forcing people to buy rubles for their commodities, and he's talking about it for all their commodities, not just oil. That's obviously going to strengthen the currency and keep their economy afloat amid all these sanctions.
It's just not, like I don't even know what to do with that. The ruble. It's
I don't know. I mean, I've never obviously. I don't trade currencies, but but I wanted you to bring it up because it was such a insane move.
One of the things I think that it really stands out to me when you're talking about currencies, but more importantly, like not just currencies, but emerging market currencies. We have seen and this is like the first time I've really realized this over the last, I would say 10 years, I've focused a lot more on emerging market currencies. You've seen them outperform in this environment, and that has been pretty wild. Now they're obviously getting pulverized today. I went long dollar max actually yesterday. So it was a trade coming out of just a technical wedge, but we've seen an outperformance of these commodity currencies and emerging market currencies as of late, and I don't know. I'm not understanding why. Like I understand there was a lot of outflows out of U.S. equities and into emerging market currencies, but is that supposed to equate to emerging market currencies, or I'm sorry, into emerging markets? But I'm not sure if that equates quite well into currencies. So that's been more of my quagmire with trading them as of late. But technically, they're all setting up for some reversals. So we'll see if they can play ball a little bit going into the next couple of weeks. They're kind of things that I've been watching. But Tracy, do you have any opinions about some of these?
Yeah, no, I mean, I don't know. I know, because I get the BAML weekly flows. That's basically all of March, we saw inflows into emerging markets. So that was very interesting. It'll be interesting to see on Friday what this week's flows were, but maybe that has something to do with it. I'm just throwing a fact out there. If it fits, great. If it doesn't,
this is a wild move. This is the Euro Mexican peso, and this is one of those that pre-COVID, so before COVID hit and locked us down globally, I used to watch this one really carefully because the Euro Mexican peso was very closely associated with risk appetite and risk aversion. So when it would spike up, it's because we were seeing intense amounts of risk aversion. So, you can see when we went into the lockdown, the Euro Mexican peso, because it's such a carry trade where asset managers will hold pesos over euros because euro is a funding currency where it doesn't yield much, but the emerging market currencies like Mexico's rates were at, I don't know, at the time maybe 5 or 6%. I mean, that's a lot of juice that you can carry just by holding, some pesos over euros. Well, that all reversed during the COVID lockdown, but we've seen it almost give the entire move back, which has been really wild to me.
That's crazy.
Yeah, it's been one of those dynamics where correlations have broken a lot in currency markets, which also leads me to believe that we're in for a much more prolonged period of volatility than we previously expected. I'm sorry, Anthony. I know you're going to get some Q&A. So
no, it's okay. You know what I was going to say while we're still on the charts, everyone's asking. We've had several questions about gold. I think just hearing from the two of you about gold after talking about everything we did today, I think it just makes sense. So maybe pull up gold and hear what you guys think about that. I mean, Trace, start off with just like how you feel about what gold has done this year. I find this to be a difficult market.
Gold has been sideways for forever, right? I mean, gold's literally, I would literally count that sideways from, I can't see what date it is, but right there. I mean, that's, for like 2 years, it's been sideways. So how I am playing that is that I'm playing the miners. I think that because the miners can rally even if gold doesn't rally crazy.
What do you think about the chart of it, Blake? I mean, what is it just showing you?
Well, first of all, I think it's bullish, but I think if you get caught chasing rallies, you're going to get hurt. So, and because you can see this is a channel over the last, what is this, 12, 13 years. We're obviously trending higher, but you want to be buying dips versus buying, breakouts. And it's even in this current W formation, it shows that we will, maybe that was the new high, or that was the completion of the W. But W formation should take us, if it measures correctly, to 2150. The thing is it's, we go back to looking at the macro perspective or what's driving it. Everybody had the argument of why gold should be going higher pre-invasion of Ukraine by Russia, but it didn't move until that event happened. So now that that's happened, I mean, it still looks like it's bullish-ish kind of, but I just don't know how much juice it has in it, right? So
I mean, it's a market I've just stopped trading it because it's one of those things that just doesn't have the follow through. It's just, if you don't buy the dip and buy it well, and when it starts to go your way and take it, I think it's a very disciplined trade. And it's one of those things where I will get, I would say, emotional, where I'll get in and I'll be like, this thing is finally going now, and I'll hold them or I'll press them a little bit, and it just never does it. And then maybe, who knows, maybe I'll miss it. And at this point, I don't even care because I've done so much back and forth with it. I'm just like, I've kind of just taken it off my charts, at least for now. And that could change, but the action will always dictate how I trade a market and how I go about trading that market, and how I react in it. And it's one of those markets where I've just had to step back, at least trying to hold positions. Intraday, different story. But just real quick, let's pull up the miners. That'll be the last chart we pull up because you've talked about it, Trace, several times today.
Yeah, I'm on individual miners, not the ETF.
Do you want to give me which ones?
Yeah, pick one, Trace.
I've got GFI. So I've been in it since last year, I think.
Well, it looks like it's flagging nicely, right?
Yep.
Yeah, I'd say that's
why this one, Trace? Before we even go into technically, why this one?
When I was initially looking to get some exposure to miners, I like this company. It was, again, really inexpensive. And it was technically set up really, really nice at the time. I mean, I take my macro theme, and then I go and look for companies that fit what I'm looking for. And then from there, I look to see if they have the technical setups that I'm looking for. If they don't, then I move on to something else. So I'm also looking at technicals. It's just kind of the last thing that I do.
Got it. I mean, I'm going to pull the charts away for now. And, as we close out today, I think that's something that you said right there. I don't think is talked about enough. And I think it's extremely important. If you have a macro theme, you need to find the best product and then instrument to trade it. It's not just like, if I'm bullish the stock market, do I just go and buy the S&P?
Right.
You better find, maybe it is the NASDAQ, maybe it's the Russell. If we're talking about indices, you talk about what's oil, what's the best way to go about it? Maybe use the micros. I don't think enough people really do that. I think so many people just go to the majors, and that may not be the best product.
Right.
That may not be where the best result's going to come. So I just think that that's something that I've learned over my time, that, go beyond that. If you have a macro theme that you really like, I mean, I'm kind of talking about what today we talked about with uranium. It was like, okay, we're both in it in a sense, but we're in a different product. And, one, who knows which one's better for overall, but it might be better for one or the other in your trading. Last thoughts I'll leave you guys both with to say today. We've talked about trading this volatility, handling it. We talked about a lot of different markets. Just kind of close out in summary of how you think you'll be going about trading over the next, several months, and what your mindset is about trading the markets. We'll start with you, Trace.
I think markets will continue to be volatile over the next few months. Absolutely. I don't see any reason why they're not, especially if the Fed's going to start being, again, drawing liquidity or taking liquidity out of the market, QT. If we actually do see QT and we do start to see rate hikes, I think we're still in for a lot of volatility. As far as oil is concerned, although I am bullish longer term, I don't think we're done seeing volatility there either, because there's just a lot on the horizon right now. So
Blake.
that's how I'm kind of approaching the markets.
Yeah.
I'm just prepared for anything right now.
Well, for me, I'm actually looking at focusing on dollar weakness. I know dollars, the index is near 100, but I think that we are going to see we're near, if not at already, peak FOMC hawkishness, but we're not at peak ECB, Bank of England, RBA, RBNZ, Bank of Canada. We're not at peak hawkishness for other central banks. And I think that divergence between expectations will keep the dollar capped around the 100 level, where you can start to look for opportunities of commodity currencies specifically. You'll have like the Aussie will be able to trade up towards 80 cents, the Kiwi dollar well above 70 cents, probably closer to 72 cents. So I think you're going to see that outperformance of the commodity currencies still play out. And hopefully, if all works well going into next week, I think the euro might trade back up towards 115 or so. So I'm really more focused on selling dollars at this point. Focused, more bullish on the commodity currencies, but hey, there are other currencies out there than just the Australian dollar or the Canadian dollar as well. So that's how I'm doing it.
And for me, I'll end it with, I'm just waiting to see what happens in crude oil. I'm on the sidelines right now. I tell myself I'm on the bench, and I think that it's still the play. I think it's still the market of choice for me to buy on any sort of kind of crash. I think that Blake and I touched on it, and we know how Trace feels about it, but the way that she's executing it. So I really, people always say be patient, but I think it's always important to know what you're really patient for. And like for me, after what I did, doing well in crude and then giving a lot of it back, I know that it's like I really just have to watch this market set up, watch everything within the action of it, and see what comes from there. And I think, Blake, you talked about it a lot as well today. I think that the indices, because that's really a lot of what my focus is, I trade a lot of NASDAQ and S&P, that I think from what I see, I just think it's a two-way trade. I mean, I'm not going to be scared to sell a rally. I'm not going to be scared to buy any sort of weakness. I think that the market it kind of took the punch on the way down. It took the punch on the way up. If you executed wrong on the edges, I think we're kind of resolving that right now. And I think that we're going to probably find some sort of middle base here and just wait and see how we react off the Fed meetings. And that's just my mindset, as a trader. I think we have to put our trading caps on, even though I won't put a hat on my hair. But I don't
mess with that hair.
Don't mess the hair.
No, there's no way. I mean, I may not be able to get it off if I get it on there. So, for me, I think that's, the mindset is different. It's what's funny is that it's really shifted from the way I was at the beginning of the year. Beginning of the year, I was aggressively short equities, and then I kind of got chopped up a little bit. Then I was super bullish oil, and I'm only trading it long every single day. And now I've gotten away from that. And it's like, we've also touched on this today, is that you're constantly learning, you're constantly adapting. This is, in your guys' words, you guys talked about this as a macro shifting environment. You have to stay nimble. You have to just stay sharp and just go with the flows, man. Be water.
Be water.
Be like water. I love it.
Be like water.
Well, thank you guys so much. It was great to, this is Blake's first time on the pod. And Blake, thank you so much for coming on. I've been waiting to have you. I really enjoy your stuff. I'm looking forward to the Traders Summit, everybody. Once again, that link is in there. You will see it in the description if you're listening to this on audio, and go there. I hope you'll join Blake, Trace, and myself, and many others. Trace, before I let you go, tell everybody about the new gig and what you got going on. Congrats again.
Yeah, so I'm a partner, and then I'm still energy and materials market strategist. But I'm a partner at Intelligence Quarterly, and that's intelligencequarterly.com, and you can find my work there.
Awesome. And Blake, what about you? Tell everybody where they could go and just see more about what you're doing.
Well, I'm the founder, one of the co-founders and president of Forex Analytics with an X. So that's where most people know where to find me. I also host the Traders Summit, interviews and stuff. So I get to meet with a lot of people, and Traders Summit's where you're going to be able to find us, the three of us, this weekend.
Yep.
So,
yes.
And it's free. It's free to register. So it's tradersummit.net. And I know Anthony put a link there. So I'll see you guys there.
Yeah.
Everybody. And all of you guys out there that are listening to this, thank you so much for joining in. I know we didn't get to all of your questions, but once again, we did our best to get to all of them. We covered a ton today. Hopefully you got a lot out of it. I know I'm always learning from these two. They're good friends of mine. They're great people. And I appreciate you guys coming on so much. This will be recorded. It will remain here on YouTube, and it will be on all of my audio channels following this. That's a wrap for this week, guys. I'll see you guys at the Trader Summit. Be there.
Perfect. See you.
Thanks for having us.
Thank you.
Thank you,
guys.
Anthony.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.